Yes, you're quite right. There's expectations that the central bank is going to go higher on their rates. But don't forget, you have to look at things vis-a-vis the overall scope of the economy. Now, with the recovery, so to speak, fragile, we saw Q2 figures at 1.5 coming down from 1.95. So in that kind of situation, the central bank has to tread very carefully. We believe they'll still move in due course higher, but as it stands now, 12.5 and 13.5 at the long end is considered quite appropriate, and that's what we see. And being aggressive, we saw about 138% sale over the amount they initially offered.
Right.
And yes.
But would you say that that mop-up is very successful, or do you think that there's still a lot more liquidity coming to the market and the central bank may have to do this again in a couple of days?
Yes, we actually started the week at 400 billion. We had, on Wednesday, there was a reissuance of NTB sales. That basically had no impact on liquidity. It was like in and out. So basically, the OMO has been the main event we've seen this week. And it was effective in the sense that system liquidity has dropped significantly. As I speak, we have figures of somewhere around 70 billion, and with overnight rates having inched up to as high as 35.
But are you expecting more liquidity next week, or do you think that we could have at least 1 week of relatively low liquidity coming up?
Yes, except if you look at anything outside the calendar, anything we have will be just basically maturities. We don't have any major source of liquidity coming in now. FAC already came in last week. Nothing is being expected now other than maturities. Overall, though, we are in a pre-election period, so overall we expect system liquidity to be a bit on the high side.
All right, let's get your thoughts on the external reserves. We know that the central bank is managing that, and they try to tread very carefully with that. But it's become more challenging now that we've seen quite a few foreign investors sit on the sidelines and not getting really heavily invested in Nigeria for perhaps several reasons. Do you get the sense that this trend may continue in terms of the external reserves? And overall, what's your take on the direction of the external reserves?
We've seen it drop quite high from about 47 billion. A lot of analysts thought they were looking at about 50 billion by end of the year, given oil price. Last I checked, we saw about $86 per barrel. The view is that oil price will continue to go higher. Our production is also picking up. Last I checked, about 1.8 million barrels per day. But given the fact that the FPIs have exited in large quantities, but right now it's not as if we have so much more aggressive exit from the FPIs basically now. So I would expect the reserves to stay stable around current levels, and we may even be able to see it pick up gradually into the year end.
All right, that will be interesting to see. But what about the currency? What's the prospect for the currency in your view? Starting the quarter relatively stable across the markets, but there are some that think that we could see it weaken at some point because we don't have that flow of foreign portfolio investors as we've had in the past. What's your take?
For the currencies, basically, our currency is quite stable at the I and E. Excuse me. The currency is quite stable at the I and E. 364.5 was the highest we saw today, and the activities has been more of exporters and importers. There's been little activity from the foreign portfolio investors. So we expect rates to remain stable around those levels, albeit with a slight risk of further devaluation to the upside. At the wholesale, we've seen the complete convergence from the central bank. Wholesale rate has increased to 362, but we find a bit of aversion from clients. They prefer the I and E because, of course, they can get spot delivery. They can be assured of the full amount.
Okay, so, but what is the difference between delivery in the wholesale market and the I&E window. Can you just clarify that?
Yes, at the wholesale, there's possibility, depending on how aggressive your rates are, of you getting forwards of up to 15, 30, 45 days, while at the I&E, you can get funds for value spot, that's 48 hours, or even same-day delivery in some cases.
Well,
so
you mentioned
importers actually prefer guaranteed volume and guaranteed time of delivery.
You mentioned the convergence, and we've seen more and more, if you like, segments of the FX markets converge. But we still have a rate out there that is somewhere closer to 305, which one can call the central bank rate for the currency. Do you think that is going to move at some point?
Yes, it's going to have to move at some point, but we all know why we have those rates there. Some government contracts are being taken care of at those levels. But if in any direction, it's still going to be a convergence towards the I&E. We don't see any form of naira appreciation in any of the rates.
All right, let's talk a bit more about liquidity and the outlook for that, and what's the likely impact on fixed income yields going forward. What's your take? What can we expect over the next few months?
Over the next few months, we expect the central bank to aggressively mop up and prevent any possibility of excessive pressure on the I&E window. So we expect on the back of that, they might actually move their rates up at some point. But we do not expect them to get anywhere close to levels we saw last year, maybe closer to 15%.
All right, 15%.
Our view, yes. Well, maybe, just a view.